We paid $650,000 for this property. We put $300,000 into the renovation, and we just sold it for $1.1 million. And we're gonna make over $400,000 on this house. But how does that math work out? James, that math doesn't work because this is a DADU development flip site, you guys. We also were able to carve off a back lot in the back that we're gonna build a DADU for $350,000 and sell it for $850,000, and that's where the juice is. So DADU investing, what is DADUs? What's a DADU? And why are you sick of hearing that word? Because it's everywhere. DADU investing is one of the hottest trends in America, especially if you live in an expensive metro market. I'm James Dainard. I'm a local real estate investor in the Seattle market, and guess what? It's pretty expensive here, and there's a shortage of housing. So what is a DADU? A DADU is a Detached Accessory Dwelling Unit, and it allows you to permit and build a detached structure in your backyard. This could be a 1-bedroom house, a 2-bedroom house, or on this site, we're building a 3-bed, 2.5-bath with a 1-car garage. Now, what is the purpose of DADU investing? There's a couple different angles with it. On this property, we did it with a development investment strategy. We paid $650,000 for the property. We put about $300,000 into the renovation, and we just sold the property for $1.1 million. Doesn't make a whole lot of money. I think we're walking with about $25,000 in profit after it's all said and done. So DADU investing is great for any type of investor, whether you're buy and hold, a flipper, or a developer. It works for all of us. It's very rare that we find that magical deal that everybody's chasing. Now, each area and each jurisdiction allows you to do different things with it. In the local Seattle market, we're able to condoize off the DADUs and sell them separately. So it works great for development and flipping, but it also can work great for buy and hold. Many jurisdictions, you're not allowed to sell them separately, which is a bummer. You can't go out, you can't rip the deal, you can't make your own $400,000, but you can build an extreme amount of wealth by building in rental structures. There's many plays that investors are looking at. They buy a house, they renovate the house, they increase the value, and then they permit a DADU in the back and they rent them separately. Now, down the road, when there's more path of progress in that area, they're eventually going to allow you to condo those off, and then you can sell them separate and 1031 exchange them into a different types of property. But it's a great way to build cash flow in today's market. Right now, interest rates are still at very, very high levels. As you look at your traditional rental property, it's hard to make it pencil. The cash flow is just not that sexy. I don't want to buy a rental that's going to make me 4%. But when you buy the right kind of property, you can create the income and create the rental wealth by permitting that DADU and maxing out the potential of the property. This is a great way to build cash flow, but you want to make sure that you're doing it on the right property. The key to buying and building a DADU for cash flow is buying the right property to have the right metrics. For example, in San Diego, Los Angeles, a great market for DADU investing on the rental side. There's a mass shortage of rentals. People are looking for good product. You can build the DADUs for about $250,000 to $300,000. And many of those markets, they will rent for over $4,000 a month. So if you paid $350,000, you're collecting $4,000 a month in rent. That's over a 10% return on cash by building out the DADUs. So before you go and you permit something in your backyard, you want to look at what's the metrics on the property. How much does it cost you to build? How much leverage can you take on that, and whether you have to leave much cash in the deal, and then divide that by your annual NOI, and that will tell you whether it's a good investment or not. If in your market you can get a 6% return on a rental property, but by building a DADU, you can get a 10% return on your investment, it's gonna make all the sense in the world to build out your rental portfolio. Plus you have a new house with low deferred maintenance. It's a great way to build wealth. And in your market, if you see that properties and DADUs can be condoed off later, or that's on the legislation coming through, it's a way to explode your portfolio. If you buy a property, you're keeping the front house as a rental, you're keeping the back as a rental, and then they allow you to start condoing them off and selling them separately, it's a way to create an extreme amount of equity. The properties can be sold separate, you create a lot of value, you sell them off and 1031 them, and you can trade them out for much bigger rental properties later. On the development side and the flipping side, and that's what I love doing, especially in our Seattle market, we have an expensive market. It's hard to find good deals that will give you great returns. And so these backyards can really enhance the deal. So on this property here, we paid $650,000. We put $300,000 into the renovation. We're selling it for $1.1 million. Where net profit on this is about $25,000. It is not a good deal for a flip. Way too much risk, not enough return. But we're able to build a $350,000 DADU, a 3-bed, 2.5 bath with a 1-car garage, and sell the property for $850,000. This was great for a development site because it was the right lot. So I'm gonna walk you guys around this lot right now and talk to you guys about what makes a good development site and whether you should be doing a flip in a development or just kind of leaving it alone. I've been seeing a lot of people buy these properties, they put a DADU in the backyard, and then they have a very unsellable product in the front and in the back. That is not what we're looking for. Those are better for the rental sites. We want to look at what makes a good development DADU site, and this is it. So when we bought this property, the first thing is we bought it right. It was a borderline teardown. Everybody that was looking at it was thinking they were going to scrap it and build 2 to 3 houses on this lot. By me looking at being able to flip the house and putting a DADU in the back, it allowed me to pay and outbid any other bidder because I could move fast, I could move quick, and secure the deal. So why did I like this for a DADU site? And at the end of the day, I'm a flipper. I like renovating houses, I like putting big yards in, and I like selling them for a premium. So why did I choose this one to do a DADU investment? There's 3 things that I'm looking for when I'm looking at doing a DADU development site. As a flipper, I like getting in and out of projects, and when you start building in the back, it slows things down. And so that property has to have certain characteristics for me to want to take it on because the profit margin needs to be there. So the first thing I'm looking for is the size of lot. In DADU investing, you don't need special zoning, you just need single family zoning, but you need the right space because when you build something in the back, you're taking away from the front house. On this property, we had a 9,000 square foot lot. It's huge, it has the right space, but we were able to create the DADU lot, which is roughly about 3,500 square feet, so a nice sized lot, but it didn't take away too much from the front of the house. So it's something you want to watch out for. If you have a smaller lot and you put the DADU back there, you're gonna be selling a front house with no yard. Oftentimes it takes away from parking, and then you have a unit crammed in the back that takes away from privacy, and also it just takes away from the experience of the DADU as well, because if you feel crammed in the front house, imagine how they feel in the back, and they're not gonna pay you that premium. And so I'm always looking for a good, deep, large lot so I can create the right space and it won't affect the value too much. If I was to build a DADU on this property, and it was, let's say, on a 5,000 square foot lot, that could have dropped my value almost $250,000 on this front house because I wouldn't have had a yard. The back DADU lot would have gone from $850,000 down to about $700,000 to $725,000. And so even if I could have built that DADU on a 5,000 square foot lot here, I wasn't gonna do it because it affects too much. So as you're comping out these houses and you're looking at the deal, look at where are you gonna put your DADU, how is it gonna affect the usability of this front house and the usability of the DADU, and then you have to pull comps that are like for like. If you have a house that doesn't have a yard, you need to find comps with no yard. You're gonna see a big delta there, so don't make that mistake. So first thing is, I look for the right lot that has the right dimensions. The next thing that I'm always looking for is what's the access. So as you can see in this property, we were able to install a new road that went back to this garage, and you guys, that garage is basically a tear down. We built our own little DADU garage there. But we have our own separate access. So a corner lot is always gonna be the best lot that you can get for DADU development investing, or a street to street. When you can create different access points for the 2 different properties, that's how you're gonna get a premium. They're gonna feel more like a house, and if it feels more like a house, you're gonna get paid that extra money. So on this property, I loved it because we still had access through. We were able to install this road and create the access off of this corner. Now with the DADU on the back here, we were able to get access now off this. So we have now 2 different addresses on 2 different streets, and it doesn't feel like it's something in the backyard. Access is a huge deal. If we were only able to build this DADU back here, and they had to walk through the yard or park on the side and then walk through, that's gonna be a difference of over $100,000 in value for this back DADU. If we didn't have the right size lot, where we wouldn't have the right amenities of a backyard, a garage, and the space, it would have knocked another $100,000 off the value of this DADU. So again, I'm looking for a nice big lot that doesn't affect too much of the spaces. I'm looking for the access. Am I on a corner? Great lot to do it on. Am I on a street to street where you can carve off the backyard and they have two different access points? Another great lot for DADU investing. Don't get it twisted. Don't buy a property, build a DADU in the back for resale. If it kills the access for the two properties, you're gonna have a hard time selling those properties. Those are better for the rental sites. So as you can see, we have all the amenities, and that's what is important as you're looking at DADU. Can people live here? Again, just because you can build in the backyard doesn't mean you can. We got a nice corner, separate access points. We have a big deep lot. Our DADU is gonna have a backyard. It's gonna have parking. That's what people wanna pay, and that's what they're gonna pay you that premium for. We are able to carve off this lot and not have that much impact because we were able to install all this sod. We have our garage, we have our driveway, and then back here, we still have a very, very good usable yard. And that's important as you're looking at these deals. What are you trying to sell? What's the price point that's gonna make sense? And do you still have those amenities that are gonna get you this price? So as you guys can see in this backyard, even though we carved off almost half of it, we still have a ton of grass space. We've wrapped the yard all the way around. We got a big paver patio. Someone can still live here and feel here, and they're gonna pay us that premium. And that's where the most important piece comes into, is does the math work? Now on this property, when I'm doing DADU development investing, my goal is to at least break even on the lot, or at least be into the lot on a negative less than 10% of what the value of the property is. So in a worst case scenario, if I was selling this property for $850,000 in the back, the worst case scenario I'd want to be on this is to lose about $85,000 on the house to get the lot for $85,000. That's my rule of thumb. Am I below 10% there? Now in this deal, it worked out really well. We actually made $25,000, got the free lot, and now all the juice is getting built in the back. So when you're doing your DADU investing, guys, again, recap. Is your lot big enough? Does it support to where it's not over densified and it's not gonna cause too many negative impacts on your property? Are you not gonna take away parking? Are you not gonna take away too much yard space? That's good product for resale. The access point is essential. When you have two different access points, whether it's street to street or corner, you're gonna get a premium for both products, and it's gonna help you get that math a lot better. And most importantly, run the comps and what's the impacts of what you're doing. Anytime that you touch and take away amenity, it's gonna affect the values. How can you create the space? Is the lot the right size to where you can still have the amenities that you need to run your comps, look at what they'll sell for, and do you make money on this deal? So for more DADU investing, make sure you like and subscribe below for ProjectRE. We're gonna get deep in the weeds over the next year going about the step-by-step process. Just because we built the DADU in the back, we gotta condo it off. There's a ton of paperwork in there, so stay tuned. I'm gonna take you through that on our next YouTube video.